Welcome back, everybody. Let's change the audio up a little bit. Hold on a second. Here we go. Welcome back, everybody. Hopefully my voice sounds a little better. Here with a special guest, Waters Above. You guys might remember him from a couple months ago at this point, and he was very, eerily clairvoyant in some of his predictions that are coming true right now, right before your eyes. So we're gonna talk a little bit about, recapping what we talked about last time in terms of where the markets are going and how cycles and gematria tie into a lot of this stuff, astrology, whatever, especially how it ties into HEX, but also the macro level as well. And so without further ado, what's going on, Waters?
I'm doing great, and thanks for having me back on. And it's great to be able to recap some of the things that we spoke about in the last time. I know I kind of came in here and laid a lot of information down on everyone, and it's nice to kind of watch some of these things happen. And actually, you've sort of kind of influenced me a little bit to make some more content about HEX. So ever since we got together, I probably made 1 or 2 YouTube videos following up, and then I came out with a couple videos over on Patreon. Actually, my last podcast that I just released was about a little bit of a wrap up on HEX. So yeah, I've been following it a lot more, and I've been getting a lot of people from your community coming over and the HEX community in general, trying to keep up with this information that they're getting from my channel. So I just want to say thank you. I'm super grateful for you and your whole community for showing love and coming over and supporting.
Yeah, well, likewise, man. I think it's a symbiotic relationship. So, we have a lot to learn from your community and vice versa. And it's pretty cool, like what's coming true before us. I think you predicted kind of a dip or a big wick down to 3 cents. And 2 weeks later that happened. And we've kind of just been hovering around between 3 and 5 ever since. I can pull up, for people that don't remember, you might want to get caught up with the last stream that I did with Waters. But let me just pull up a quick screen share because I've got the YouTube video up. And this might be a little hard to see, but let's, try to zoom in on that as much as you can, right? But you basically pulled up some Fibonacci lines between the 50-cent peak and the later kind of 8-cent dip right before we all thought that PulseChain was going to launch, and basically said that there's this macro selling climax that you outlined in that red rectangle right there. And what do you know? That actually happened, right? So lo and behold, I wish I could pull up the chart today, side by side.
Yeah, but, so I'll get into the chart in a little bit, but yeah, that's great that you were able to pull that up.
Yeah, and so what we're looking at was, right, you said there was going to be basically a rebound up to, or could be as high as the 17 to 21 cent range, but obviously a lot more downside. That was in mid-May, and so it was kind of, everybody was bearish in mid-May, or they were just starting to become bearish. I think a lot of the last of the bulls that were hanging onto that narrative kind of had to admit that, okay, this is going to be bad for a while. And you basically told everyone kind of what I've been telling people too, is get ready for a rough summer, with the Fed and the inflation conditions and everything like that. And then you brought in things like the moon cycles and the Shemitah kind of lining up all perfectly. And it's happening. So yeah, we've been sloshing around between 3 and 5 cents, pretty much the exact red zone that you see on the screen. And we never, a lot of people are calling for this 1 cent crash, or just maybe a quick wick down to 1 cent per hex. I'm not sure if we're ever going to get that or not. I like this zone right now as a buying zone personally. I feel pretty confident recommending almost anybody that wants to get in to just get in now, right? I mean, not financial advice, of course, but yeah, if you were already going to buy HEX, I don't know what better prices you could ask for at this point after a 93% retracement. And I just think the future is so bright when you look at everything that we have to go in the timeline. But yeah, so what do you think about where we're at currently? Let me pull up another HEX chart just to show you guys where we're at today.
Well, you touched on a lot of great points. For one, you revisited this idea of the Shemitah, which for anyone who's unaware, it's practiced in Judaism, but it's practiced in the Hebrew calendar. So in the Hebrew calendar, every Rosh Hashanah, which is their Hebrew New Year, in a 7-year cycle, we have really big noticeable financial chaos. And some of the biggest events that happen in the world are around this 7-year cycle. So just to do a quickly brief run through. 7 years before this, we had the Chinese stock market crashing and Asian market chaos. Then 7 years before that, we had the housing market crash and, lots of liquidity issues regarding that sector. Then we had 7 years before that, the dot-com bubble and 9/11. You keep going. 7 years before that was the bond crisis. 7 years before that was 87 Black Monday. You could just keep going. You could go and go and go. You get to World War I, World War II, Tulip Mania back in the Dutch, Empire. It's just the way this works. So essentially, the Gregorian calendar, which is the calendar that we look at typically, it ends in December 31st, and then we start our new year on the 1st of January. That's kind of like the fiscal year. So we do have some patterns that play out in the stock market regarding the regular calendar. We have sell in May, walk away. We have Q1 after every Shemitah is also really, really a negative time for prices. We'll get to that later. But one of the things we also notice is that specifically with cryptocurrency, we tend to have all of our all-time highs and all of our all-time lows around Q4. And that's at least for Bitcoin. And everyone's aware by now that Bitcoin plays a big role in the influence of the energy of the market and where it goes. If Bitcoin has a 70% correction, you could see really even promising projects lose 95% of their value. So if Bitcoin goes up, 50%, we could see altcoins go up 1,000%, even 10,000%. So it plays a big influential role. So here we are, it's July, it's late July. Rosh Hashanah, which I just mentioned before, the Hebrew New Year, that's going to be September 26th. So that's coming up very, very soon. And historically, all of our biggest crashes typically happen after the end of Shemitah. That's historically. But we're going to get a little bit into this later today about how this cycle that we're watching right now is a little bit different than the prior cycles because we have a lot more technology today and we have a lot more access to investing that we've never had before. It's a lot easier now for people to become investors. You could just download an app on your phone and you could instantly buy. You could be at the grocery store and you could buy crypto or you could buy Apple stock. So this is a much different environment than we had comparatively to like the dot-com bubble, for instance. But I think we're seeing a repeat of a lot of the kind of the narratives and the overall market behavior of the dot-com bubble. So for anyone who is unaware of what that was like, maybe you're just getting into the markets in the last couple of years. If you study the dot-com bubble and just the environment of how that was going, I think it would teach you a lot of not only what's to come in cryptocurrency, but why cryptocurrency has been acting the way it has been the last 6 months.
It's funny. I mean, everybody loves to make these comparisons to the dot-com bubble. I think it's almost like the dot-com bubble on speed. You know what I mean? Like it is basically, if you believe that time is defined by, the number of events and connections and stuff that are made within, a certain time frame. Like, for example, if you had a vacuum, you couldn't actually really depict any time because there'd be no interaction between any molecules or anything like that. But if you combine, or if you take a look at, this crypto bubble that we're currently experiencing compared to even 2017 in that bubble, even back in 2017, people were calling the 2017 crash kind of like the dot-com bubble. But it almost, because things are speeding up, time is speeding up, I believe, and like because crypto is a part of this new paradigm that we're in, we've almost had two bubbles in the same time span as the dot-com bubble, essentially.
And you're so right. And one thing I'll say, and it's not to rain on anyone's parade, I don't believe you said this statement, but you were just basically quoting people who were feeling this sentiment. 2017 was not anything like the dot-com bubble. But I could see why people felt like that when they were living through it. What we're seeing today is like the dot-com bubble because it's not isolated to just crypto. It's isolated to the entire market. Even gold looks like horrible right now. So just to, kind of revisit what you said right there, but you mentioned another thing about the cyclical nature of the crypto cycles and how they're definitely sped up. And I agree with you. And I think a lot of it has to do with the Bitcoin halving, because that's what's been the indicator so far to prove why these cycles have been going this way. And that's not arguable. Until that changes, there's no argument there. It's just proven in the charts. So far, every time Bitcoin has a halving, we see a bull run within a 6-month time frame after that halving event. And leading into that halving, we typically see a very boring, a very sideways, low volume market. And we even see that the halving itself, the actual date let's just call it the week before or the week after the Bitcoin halving, tends to be a beautiful buying opportunity.
And
then it leads to essentially these parabolic bull runs that we call bull runs.
Yeah, just to give you guys a visual depiction, if you guys want to watch the screen, if you're not driving or whatever, let's pull up, let's see, Bitcoin halving dates. Yeah, and you can really just very simply see that, you know, all these halvings were great buying opportunities. And just for the record, guys, I believe the next halving, this is an old chart. Okay, so this is from, it wasn't even 2021 at the time this chart was made. The next halving is coming up on May, I think 24th, 2024.
Correct.
Maybe it's May 14th.
Yeah. It'll swing because of the blockchain and the way that it operates, completing the blocks. But yeah, essentially between late March and May, we should have the halving.
Right, exactly. And so as long as you're buying, before that or within that range, I mean, it's a pretty good time to buy, right? And if you look at these halving cycles here, it was even a better idea to buy before the halving, right? Like at the bottom of the crashes happened before every halving, but it was kind of the cusp or the inflection point, right?
The halving I would never call a bottom indicator. It's more over a momentum or pivot indicator. It's when the market shifts energy. So when we switch from a more bearish, negative, when everyone's calling crypto a scam, after the halving is when everyone kind of seals their lips. It's when you start to see like the real ones are out there either being I told you so or like here, enjoy the ride. It's one or the other. And I'm really lucky because I actually started my mastermind course about maybe 3 or 4 months after the halving. But I remember very vividly when I was working with private clients, when I was working with the people that I was coaching in finances and in their businesses, I remember telling them like, hey, the halving just happened. I think this is a really great opportunity to consider building positions. And a lot of them didn't even really know what it was all about. Like, what is the halving? What is blockchain? And I was just trying to tell them, like, you could take your time to learn all of this stuff if you'd like. But the market is so scary right now because of the C word pandemic and all the narratives that were going on with that. The Fed just came out and admitted that they're basically going to print money to like infinity. So when you take those two things and you add them together, it's like a no-brainer. When the Fed came out and admitted what they were going to start doing, it was basically a buy signal.
But then when was this?
Well, I'm talking about basically the shift after the last halving, which was in May of 2020. So that was a really amazing time because if you think about it, we had the March crash and then 2 months later we had the halving.
Yeah, exactly.
It's like it was such a great opportunity because it gave people about 90 days to build positions.
Yeah, and it was a giant dip that was very short-lived. We made a V-shaped recovery. Everybody was telling you the world was going to end. And that's the same thing that they're telling you today. I mean, the world is always on the brink of apocalypse. But if you just believe in humanity and that we're all going to make it, like we're all going to survive, it becomes a lot less scary. And just don't listen to the talking heads that, basically get paid to FUD you out at the bottom. Because that's what a lot of these people do. And interestingly enough as well, the Fed, I think, is meeting right now as we're talking, right? So a lot of people are expecting them to raise rates again. Do you expect that'll have any effect on the shorter midterm?
So in my last podcast and my last YouTube video that I put out, I actually said that I believe that what was coming was baked in. So essentially, once we hit like the 19th or 20th of July, which was another date that I called out using Gematria, but that pivot point of the 20th, I was anticipating whatever happens after that is probably going to be baked in earlier to the Fed meeting. So whatever the date of the Fed meeting, they were going to use that time frame to do what they do. And another thing is yesterday, we started getting some bigger tech companies coming out with earnings. So that does play a little bit of an influence. If you look at the DXY, which is the US dollar currency index, that started to roll over a lot into this Fed meeting. But then as of yesterday, it just kind of pivoted out. So we're seeing just this energy. And as this energy kind of builds up, it's always typically centered around either these earnings or, the monthly close itself or a FOMC meeting, especially when you have this environment we have today. Just pure blown chaos of inflation and
pure speculation too. People always front run these things. People they're always priced in by the time you actually get to the meeting date. And so people are even just gambling on like how many percentage points and all that stuff. And it's just, I mean, that's what the markets have become. The price to earnings ratios of everything are just totally inflated. Nothing's really based on fundamentals anymore. So,
Right.
you know, what a perfect time for cryptocurrency to come in and save us all, right? Because some of this excess capital and cash can flow into basically better assets that are more fit for a digital era, in my opinion. But yeah, like I got the DXY index right now, and you can see there was a little dump, you know, with people in the past couple, basically 2 weeks or week, anticipating that a 75 basis point increase is probably going to happen. And now that, you know, it is the day of the meeting, we've got a little relief because it's almost like the climax, and it's like this is kind of the what do you call it, the recovery phase after that. So that's what I think is going on, and temporarily. And if we, I mean, how do you think the global S&P 500 fits into all this right now? Do you think you see crypto and traditional finance pretty correlated at the moment? I mean, I think that's kind of safe to say.
Yes, I think they are, and I think they'll continue to be, especially when we're in a Shemitah year. So people need to kind of learn that the Shemitah cycle in and of itself is everything is based back to the dollar. So the world reserve currency being the US dollar, as long as that's doing what it's doing, then we're going to see everything else reflect accordingly. So yes, crypto did have this weird isolated experience back in 2017, but we need to remember that's why the halving is such a big part of crypto's conversation. So even if people are like anti-Bitcoin, and you know, maybe people have come to my channel after watching your work and they hear me talking a lot about Bitcoin, but I don't care about like Bitcoin. It doesn't matter to me. It's an indicator. Bitcoin is an indicator of market energy, just like the DXY is an indicator of market energy. I believe in a free market, and that's not what we've had forever. So my opinion and my beliefs are totally separated from what I teach because I need to. You know, I'm a technical analyst. There's no room for my emotion here. But to quickly answer your question, yeah, absolutely. The markets, the indices in and of themselves are going to be doing what they do based on the dollar and based on just the overall institutional investment activity. And we see that there's some issues going on specifically with precious metals because they're not being used as a hedge right now against this issue. And it's making me wonder, like, what are they setting us up for? You know what I mean? And then we have everything that I've been teaching people for the end of September into October, November. And I think there's going to be a restructuring of finances just because of what I'm seeing with precious metals. They're not being used in the traditional sense. And when you study the prior Shemitah cycles, you'll actually see that gold, it behaves very neutrally, or it actually behaves pretty positively during the years where we have these big, you know, market volatile, very volatile market swings.
So what I could imagine happening is, I don't know if you guys have heard of Ray Dalio, but he's been talking and basically fear mongering about a shift in the New World Order, right? He says every 200 to 250 years, there is historically a change in the global reserve currency. You know, it went from, you know, the Netherlands to basically the US dollar a couple years ago. And before that, there were many long-term cycles of different powers that be having different world reserve currencies, which is basically means the unit of account, right? What is everything priced in worldwide for global trade? Now, he's trying to scare everybody. I believe the fear is, you know, China. Oh no, what if the Chinese yuan becomes the new global reserve currency?
Yeah.
What I could easily see happening is that during this period of crypto crashing and market deflating, we know that the JP Morgans of the world are scooping up all this cheap Bitcoin, and we know that they have plans for a central bank digital currency. I wouldn't be surprised if they are going to be happy to sell you back that Bitcoin at 100K in the next cycle, but also use Bitcoin and use the mainstream cryptocurrency, so to speak, as a gateway drug for their central bank digital currency. Say, hey, if you like Bitcoin, guess what? You might like our central bank dollar. That's a digital dollar. And maybe we'll even give you, you know, 90 cents on the dollar if you cash in your cash, your self-sovereign cash, for basically money that we can essentially shut off and spy on you every day.
Yeah,
Maybe.
I don't think there's maybe there. I mean, I think they've laid out the infrastructure for what you just said, and they've exposed it. And I believe the plans are going on behind the scenes, and they've been implemented already by a lot of, you know, and the implementation, it's going to eventually bleed into the retail banks, and then the what people call what are they, credit unions, you know what I'm saying? So it's going to eventually make it there. But as for the large scale, you know, like the IBS, World Economic Forum, you know, all these, you know, bigger globalist, socialist globalist institutions, they've already implemented their their blueprint for how the next, maybe 10 years or so is going to go. And I believe you're spot on in that. One of the big things that people don't talk about too often is just the tokenization of the stock market. I believe that's in the works. And I believe when you see Robinhood offering fractional stocks and starting to offer these kind of ideas, and when you take what I just said and you bring in this recent bull run that we've had since, let's just call it March of 2020, they use things like Dogecoin and Shiba Inu and Elon Musk's tweets, and they use that to get retail excited. They use that to get retail to kind of dip their toe in the water. You know what I mean? So you brought it up as a future thing, but I believe it's already kind of started. And I'll say this, Matt, because a lot of people work with me. I have a lot of private clients. I take a lot of calls, and I'm noticing that the demographic of people ever since the market became very bearish, the demographic of people that have been reaching out to me are 40 and older.
Yes, I see the same thing when I look at my YouTube analytics.
And that makes me really excited, because that's the hardest group of people to actually get excited. But one of the things to say is they are much more mature and sophisticated with how they hold their positions. They're not the type to panic sell or to. Sorry.
I was just gonna say, not to mention they have all the money, right? Like us millennials can barely afford avocado toast.
Yeah. So, I mean, anyways, I believe that if crypto was to have that target demographic be the majority, then we wouldn't be seeing a 95% correction in an altcoin. Like, these big corrections happen mostly because of leverage, secondarily because the Federal Reserve and the central banks injected a lot of liquidity, which led to a massive deflationary spike in a lot of these prices. And then, of course, you have to give back some of the gains. But when you're talking about, 18-year-olds up to 30-year-olds, this is a group of people that they learned everything that they've learned in their life from YouTube. All their, and that could be a good thing for sure, but we got to remember, it's about where they're at intellectually and how they're able to control their emotions. Here's the thing in life. It doesn't matter how smart you are. It matters how good you are at making decisions.
Yeah. I mean, life is literally just a bunch of decisions from day to day.
Right. And there's a correlation between the higher IQs, the less likely to be successful. And that's a fact. So
all the richest people in the world are not the smartest people in the world.
Exactly.
I mean, it's really just, Richard Hart has a great quote. I mean, it's really it's an old president about persistence. Calvin Coolidge, that quote, nothing in the world can take the place of persistence. It's really just having an idea and a vision and directing your attention and focus on something. You'll find a way to get there, but
the higher the IQ and the smarter you are, you become overly logical. And the more logical you become, the more you overthink, the less likely you are to make decisions.
Yeah. Yeah.
That's why the smartest people aren't really that great at investing.
But they think they are too.
Yeah.
They often they'll think they can outsmart the market when really it's more of a go with the flow thing. And I don't even like trading. I mean, I preach the opposite of what a lot of 90% of crypto influencers talk about. Don't trade. Take your own time back. It's the most valuable gift you have. And then give yourself, delay your gratification and pay yourself in the future and thank me later is essentially what nobody wants to tell you. But that's how Warren Buffett did it. That's how us new, the new wave of rich financial elites are going to be made in these markets right now. So we'll see you guys in 10 years and we'll see who listened and who thought they were smart.
No, I completely resonate with what you just said. And it's a big reason why on my YouTube, I don't discuss leverage exchanges. And that's what a lot of the bigger YouTubers I've noticed do. Their intros to their videos, they talk about getting a free bonus if you sign up to Bybit or some leverage exchange. And they have the largest platform. So even if you took the top 5, and I'm not trying to be disrespectful to anyone here. I'm just building off of what Matt said and why I agree with what Matt said about not focusing on trading. But if you take the top 5 biggest crypto YouTubers, they're all giving links to refs on getting, $50 in Bitcoin for signing up for a leverage exchange. And these are people that don't even know they don't even know what blockchain is. They have no idea actually about how the charts work. And now it's like you're leaning them into something that could be extremely awful for them if they don't know what they're doing. They have no risk management. They're learning everything in a very emotional kind of platform, and it's a very volatile asset class. So when you combine all of that, you're basically it's a recipe for disaster. So I agree. No one should really be playing with leverage right now unless you're a seasoned trader. If you want to get into trading, you should probably take 6 months of paper trading. And the beauty of TradingView is there's an app for free on TradingView where you can just have a paper trading account and learn that way. 6 months of learning that way. Crypto's not going anywhere, guys. Like, practice for 6 months. I mean, how long did you go to school? How many years did you go to school? You'd be surprised with 6 months of just paper trading and learning the charts, how much more proficient you would be when you get to playing with real money in the future.
True. Or just don't trade at all. That's typically the easiest option for 99.9% of people. Getting back to the cycles of the Shemitah, right? Do you have a particular day on that? I know you were talking about September as the potential low point or the turning point for these markets. And looking at this HEX chart right here, if this is indicative of the greater crypto or macro market at all, it looks like it's playing out exactly to a T. We met right before, we streamed right a couple days before in May, before you see that giant wick in HEX. And you basically called it to a T that we would hit 3.5 cents. We did right there. And now we're in that range bound zone that you've been talking about. Has anything changed in terms of, I think September 18th was the exact date, right?
No, so the Shemitah or Rosh Hashanah happens in September 26th, and that's very important. That's very important to consider because September 26th is a Monday. So that means the stock market's going to be, like, everything's going to be open that day. If Rosh Hashanah was like a Saturday, what I would have imagined was the Friday probably before it would have been the big, energy. But if you want, I could switch over to my chart and I could show you guys a couple things that I'm looking at.
Absolutely.
I believe I could kind of figure this out. I'm very new to using StreamYard, but okay.
Yeah, just the screen share button.
Let me know if you guys could see my chart right now.
We got it.
Okay, beautiful. So you're going to see a couple things labeled here in this HEX chart. One is this BC at the top right here. It is for buying climax. So this is obviously the top of the HEX macro chart. And for now, this is going to probably be in play for at least a couple more years, where we're going to see a structure that is built off of whatever this high was and whatever the next low will be. And when we got together for our last podcast, I was bringing up how I called this a spring or a macro selling climax. So what this is all coming from is something called the Wyckoff method. And Richard Wyckoff was a trader back in 1901. So this is 100 years of tried and true analysis that is very simple. When you actually learn this method of doing technical analysis, you're not using any indicators. You're actually stripping away all that noise, and you're getting down to the most important thing, which is what is the current trend of the market and where are we most likely to go in our next trend? And if you can answer those two questions, you essentially have what's called the market compass. So that's why I love Wyckoff method. It's why I teach everyone. Whenever someone's getting into technical analysis, I actually teach people starting with Wyckoff method because it really saves a lot of time. It expedites and it builds a better base foundation for how you analyze these markets. So buying climax is here to stay for a while. Then the next move I brought up was that buying zone. And that buying zone, again, it was because I pulled a bearish fib from one of the lower levels to one of the higher levels before the fractal turned and broke support. So the break of support was clearly around 10 cents. So people who are really into HEX and you really like this project, 10 cents is a very important price. It'll most likely become a psychological resistance in the future now that we've broke through it, okay? So what I mean by psychological resistance, it's not only the psychological of it being a flat 10-cent zone, it's also the fact that it was this horizontal support that was going on for 300 days, okay? That's a full year. So what that means is any recovery back into these levels, that'd be one of the first levels that I see us kind of like getting a little bit of a stalling action. But in the meantime, what I believe everyone's here to know and what most people want to figure out is where's the bottom? You know, like when is this thing going to stop? And you brought up a 1 cent as somebody, I guess other people have predicted or they've come up with a reasoning behind a 1 cent hex. And I personally don't see that. And, you know, like one thing to mention is I don't do HEX TA that often. I just started really looking into this project because of Matt and because of, our last podcast. And there's a lot of interesting things about Richard Hart and all of that. So I've been paying more attention lately, and I must admit that I'm even better at analyzing this chart today than I was when we first had our podcast. And I would say with a higher level of conviction that a below 2 cent HEX is very unlikely. One of the things to mention also, and I'm not trying to give people hopium right now, by the way, like I'm very honest. In my last podcast, I gave people these lower levels, Matt, and believe it or not, I had people reaching out to me on email telling me how wrong I was and that I was pushing, I was fudding people out of the HEX market, that I was like, I didn't respond to it, but I'm thinking to myself, like how 2 days later we had that huge, wick to the downside. And it made me think, like, I believe my delivery and what I was saying was very logical and based on the numbers. I wasn't trying to get into anyone's emotions here, but please,
hey man, this is crypto. There's no way. There's literally no way to avoid that kind of a thing. And I like that you at least have some reasoning behind what you decide. I see a lot of people calling for 1 cent HEX simply because I think that's what they want. But I really don't see a lot of people, giving a thesis or a hypothesis or, any kind of logic or, hey, this time's up with that. And, there's not really a clear 1 cent support line. If we're just going off of simple resistance and supports, it fluctuates between 0.008 and 1.2. So.
Correct. So where I would personally see the lowest getting is probably 0.22. And that would have to do with the fact that would be a full 95% correction. And that would be in alignment with this little moment back here around April 7th, where we pushed up on this. I'll actually show you the full setup. It's a beautiful setup, actually. It's very clean. I'll change this for you so you can see how clean this actually is. Right here, you have a W breakout. A W is typically a bullish bias pattern. And you could confirm a W by the first V in the W being a low and the second V being a higher low. So this is very basic pattern to get people to learn patterns. So you have this W, and typically what happens when you break bullishly out of a W, you could tell because there's this heart line or the neckline. You could call it a neckline. And that would be right here at this moment. When we break above it, it is very normal to come and back test those levels. So essentially what happens is you break through a resistance, come back to retest it to confirm it as a new support. And that was this moment right here. And you could see very clearly there was a rejection. And I'm going to show you with wicks and candlestick analysis. You got a nice rejection here. And it lasted a decent amount of time. We're talking about 20 days of just a perpetual move to the downside, V-shaped recovery with a rocket. When you see this kind of move right here, guys, this is essentially a liquidity zone that has yet to be recaptured, okay? So this tells me that this level right here, down to 0.22, is very likely to be retested in the future. And when we're talking with crypto or a project especially like this project has a lot of volatility. It could do incredible. It did incredible. And it came down over 90%. So we know now that this is possible for this to go even lower. It's easy, but the speed at which this could happen is very quickly. So just a wick could fill out this 2 cent level. And for me, that would be probably the most prime buying zone for this project. So anywhere around 2 cents, I think you can't really get much better than that. Lower than 2 cents, and then I think we have a structural problem. The chart would start looking structurally awkward to me. And I would assume that maybe the overall percentage of investors that are in this project are losing their conviction and this being a long-term hold. And, you get where I'm going with this.
Mm-hmm.
And that's just up to retail. At the end of the day, a lot of people, they're happy to make money when the market's bullish. And they're getting in this FOMO zone and they're happy with retail. But then once the market turns on them, they don't want to admit that retail is actually a bigger reason why these big slides are happening. So when we get to these bottoming structures, and let me just break this down for you before I move into another chart. This is the 1618, which is just the Fibonacci golden ratio. And this is a very textbook area to come back to after you've had a buying climax when you're using this form of analysis that I'm doing, which is very simple, by the way. I'm just using a Fibonacci retracement tool. It's very simple.
Right. For those that don't know, that's just you take the high and the low, and then you split it in half, and then you have other significant support and resistance lines, which are at the 0.618 level. And that's just based off of the golden ratio we see in nature. It sounds nice. I mean, I believe that all of TA and a lot of everything is just language, right? Reality is language. And a lot of these things just help with narrative memes. And so if enough
It's
people do look at these things, then they become self-fulfilling prophecies. And in a more retail-friendly market like HEX, with no institutions, no high-frequency trading bots, no weird funny business going on, you actually do get these self-fulfilling prophecies a lot more than self-defeating prophecies.
yeah, well, I agree. There's definitely not as much bot work going on this particular project. It must be because of the exchanges it's on and all of that. But that is definitely this structure that we're seeing. It is very chaotic, and also I have a Wyckoff schematic to show you guys in a moment. But if somebody wanted to do what I did on this chart, you just go over to TradingView down 3, and you'll see fib retracement. And then from this move right here on March 15th. I'm just pulling the fib in reverse from that swing high to the swing, from the swing low to the swing high. So from March 15th low up to the current all-time high of 51.52 cents. And you're going to see that golden ratio shows up basically where we gravitated down to. So when we did that podcast last time, that was what I kind of started with. I shared that overall level as being the level that if HEX breaks support, it's going to go down to 0.37. It's going to go to that area. The depth of how low it can go is always up to, the moment. And it doesn't really matter what happens in the 4-hour chart or what happens over 1 week. Like if you're an actual investor, you're looking 5 years, 10 years down the line. So the difference between getting in HEX at 5 cents and 2 cents, it's negligible. You know what I'm saying? So
I say that all the time. It doesn't matter on the way to $5, or like
correct.
For the next bull market, we're going to be just laughing about this little range right here.
Yeah. So if you're looking at, like, if you hear me say like, oh, Waters said it could go to 2 cents, it's like, yeah, but the difference between 3 and 2 could happen in 1 day, and then it could recover back to 4 in the next week. So it's like, don't try to find perfect prices. It's not how this market works. You want a dollar cost average over a long time and just build a very solid position when everyone is scared and when everyone's bored. If you could do that, then you're always going to win this game in the long term. So
exactly.
Do you want me to?
And luckily in HEX, I think we've actually gone from scared to bored faster than everyone else, because it's kind of like the people that I tend to see in the community are a little more savvy with their ear to the ground, or their finger on the pulse, no pun intended. But yeah, there's basically a lot of us are just bored, and we're making up, meme coins, and we're getting, busying ourselves with things that don't necessarily matter. It's my philosophy basically that we can do TA all we want, but if we choose a longer term time, or say a shorter time preference and a longer time horizon for which to get our gains, we don't have to care so much with the day-to-day. And really the most important thing in crypto to me is onboarding new people, because that's how all of this works in general. That's how the price goes up in the long run. But I mean, I see you pulled up another chart here, so maybe we'll talk about the Wyckoff method.
Yeah, and Matt, you brought up a couple of good points, and I'll build off of that. One of the things that people want out of this market is to make money. Like, we all got to admit, like, that is the number one reason why retail gets excited. If every YouTuber in the world is telling everyone this is a place to make money, well, you're going to get way more people onboarded than you would if everyone was talking about how it's a scam and you're losing money from it, correct? So I love that, like, you're bringing that up as a big piece of it. Like, getting people interested and getting people into this market is important, but ultimately getting more honest content out there is equally as important. So yeah. The more honest and the more people are genuine and creating actually unique products, I believe that's what will make this market better. We don't need more stupid people in crypto. We need
not
more.
Every community member has the same value, right? I mean, you could have a detractor. You could bring in people that basically just cause more fun and more distractions and teach terrible lessons. So
right. We don't need people with more money. We don't need people with more excitement. We need more people with a willingness to actually learn, and people with wisdom. And the more people that come into this market that actually have wisdom and build a proper investment thesis and are more, just confident in the future of this asset class, then I believe we're going to see this market become mature, and it'll become mature in the way that we all desire. So anyways, getting to this Wyckoff method chart, it's a really pretty version that somebody in my community helped me actually do a little bit of the graphic design on. But anyways, this is a Wyckoff schematic number 4. And I'm going to show you a comparison between the current HEX chart and this actual chart. And one of the things that I love about Wyckoff method is you typically want to use it for very large time horizons. So you're never looking at this like on the 4-hour chart or lower. You can, but it is much better to learn with 3-day chart and weekly charts and monthly charts. And this was also designed for stocks, obviously, because Richard Wyckoff was alive in like 1905, 1910. And it's amazing how Wyckoff method works so perfectly, even in crypto today. And this schematic to me is the closest to an identical match on the current HEX chart. So now that you guys kind of see what's going on, I'm just going to quickly describe this moment up here where you see us falling down. This would be called the buying climax, which is what the HEX chart's all-time high is. So if you just consider 52-cent HEX is right up here, okay? And 52 HEX is over here in the future. So we're somewhere in the middle of this, okay? We have over here is the current all-time high, and over here is the next break into a new all-time high. And we have all of this time horizon between point A and point B. So this gives you a little bit of an idea of a visual of like how you can actually use this schematic for multiple years and just follow along with it. So let me bring up, I'm gonna turn this off and I'm gonna bring up another chart that actually shows you the comparison side by side. And I think this will be very helpful for your viewers. Okay. So let me know if you guys can see
this pulled up on the screen.
So this, you can see on the top, it says HEX, and at the bottom is the same schematic that I just showed you. The same thing. You imagine that up here is the all-time high, up here is the all-time high, and this is the future all-time high. And I believe we're moving into phase C, or we've entered phase C. And you could tell quickly that this high right here, this peak, is very similar to that peak before going slightly lower. So you have here, low, a peak, lower low, and then one last peak before breaking support. So that's what happened all in here. And I believe that this moment, this very jagged, kind of like arduous trading range at the lows, we're in the process of this now. And if anything, this big spike right here is very similar to the entering of phase C spike right here. And this little recovery that we're potentially in right now between now and the end of September could be a little bit of this action, but the final swipe to the lows is most likely sometime in late October into early November. So you see that little dip right there at the bottom where it actually goes even lower. I believe that's incoming. And now I already gave you my price target. It's somewhere around 2 cents. And the difference between 2 and 3 cents, it's negligible. So just anything that's lower than the recent lows, that would be an incredible place to set some buy limit orders if that's possible. And that would even be a suggestion, not advice, but for people that are really long-term in this project, that's about as good as it gets. And then everything after this recovery, I believe, won't show itself until about April of 2023. So we need to move out of Q1 to really like notice the recovery. And this is a very good piece of advice for people to take note of. You see this peak right here. Once you break above that peak in the future, then you could essentially assume that this was the bottom. That is the fulfillment of your absolute lows, or what we call the bottom of the bear market. So that's like me giving everyone the schematic and the blueprint of how this works. And I did this before Bitcoin broke above 12K almost 2 years ago, when Bitcoin was trading around 9,000 to 10,000. I actually exposed this exact same idea before it even came to fruition. And then, of course, we watched Bitcoin go up to 60,000. So it was using the Wyckoff method, and we were able to time it because we were considering all these things. And then we were considering the shape or the fractal structure of the schematic itself. So I hope that helps you and your community.
That's awesome. Yeah, thanks for that. I mean, hey guys, phase C, not saying it's time to buy, but looks pretty nice.
And it's a trading range that could take months to play out. Like we're talking about the next 5 to 6 months in play. And because it's crypto, we could have rallies that are 100% between now and then, right? It's very easy. We saw Quant just went up like 200, 300% in short order. And that's all it takes. HEX could do the same thing out of nowhere. All it just takes is a couple whales throwing in, some money, and that's it.
It's very illiquid right now. I mean, it's a perfect opportunity zone. And we've even got derivative products like Hedron, which I'm not even sure if, you've dug that deep, but, people are making these products on top of HEX that complement HEX, like Maximus or Hedron. that allow for things like tradable stakes or, one giant pooled HEX stake. And things like Hedron, it pumps, 30% today. And it'll be interesting to see if any of those tangential projects become leading indicators or how the money flows around in between the two, because their liquidity is significantly bonded as well. So when one goes up, often it pulls the other up with it. We have a really interesting question. Well, not interesting, but it's basically something that I think everybody would want to know. If we're talking about the bottom, what does the chart say for your next top, right? So, and in terms of a longer term scale,
rent is due.
The name is fitting. Yes.
Yeah, I appreciate you. That's a good question. So they want to know what the next buying climax will be, like what the next bull run all-time high will be for specifically HEX. Is that the question?
I think they're more so asking for, we can even just say Bitcoin or crypto in general.
Yeah, so in my vision, I think that what we're going to need to get through is the next Bitcoin halving. But what I can say is that Q4 tends to be the lows and the highs for Bitcoin, which means that it's essentially the lows and highs for altcoins. So if we're talking about like how much longer it's going to be bearish before it recovers into bullish, we're probably going to need to wait till about April. And we actually saw this happen back in 2018 into 2019. Bitcoin lost about 85% of its value, and then it recovered into the summertime. It recovered into about June, July, maybe 2019, excuse me. And in that recovery, that was like 350%. It was amazing, So that is a moment that if you actually do Wyckoff method, that moment right there is called the automatic rally or an automatic reaction. So essentially what's going on here is the market gets so oversold and so boring, and the market maker is just so good at getting people completely scared and fearful that they do the complete opposite. So leverage traders start building in shorts because they think the market's going to go even lower, and they squeeze them, and they actually send the market very quickly in the opposite direction. And now the problem with this moment is you actually should consider de-risking if that happens. Because after an automatic rally, we sometimes come right back down to the bottom again. And we saw that happen with the C-word crash, where in March of 2020, we saw altcoins go even lower than they went in the bear market of 2018. So what I mean by this is if we do have a big bullish spike in the middle of nowhere sometime in 2023, and you've been not doing so well in crypto or over the past years, that is a very, very, very good opportunity to de-risk. I'm not telling people to sell their entire portfolios. I'm just saying that it's a good opportunity because we could literally roll over and lose 80% all over again.
Absolutely. That's really good to keep in mind. I mean, it's always just good to be ready, prepared for the worst and hope for the best. And we'll give you all the hopium you guys want, but you can't make the outsized gains in crypto without still making massive, massive dips. We've got another.
But yeah, so the next top for the market, I mean, it really is irrelevant because it's all about the bottom. The bottom and the lows of the market matter 100 times more than the next top, because when the top happens is irrelevant. It's where were you when the market was discounted? That's really all that matters.
And I would just ask yourself, how much money do you want to make? And then have some take profit points along those ways. When those levels get hit, it's all personal preference, and you're never going to sell the exact top. But if you say, hey, I want to make a 10x and then 20x and then maybe a 50x and then maybe 100x would be really nice. Maybe 3 of those 4 get hit in the next bull cycle, and really just set those levels for yourself now so that you don't have to be worried about it. Because when the time comes, it is easy to not only just hold through these euphoric peaks, but it is easy to even buy more. And then essentially you bought the top, and then, you never want to give up. And I've seen people that never take any profit at all. And I'm not ever going to say like, don't take profit in crypto, because obviously we're here to make money. We need to live. We need to, rent is due, as this guy's name is, right? But one day crypto might become more of a medium of exchange. Right now it's not. So I'm saying don't trade, but at the same time, I'm saying take profit. I mean, investing is very different than trading in my vernacular. Let's see. I've got another guy here that says he wants me to pull up apex.win/charts. You might find this interesting, actually, because this is as close as you can probably get to fundamental analysis when it comes to HEX.
I love this person's picture. It's like a moon with the HEX logo on it. That's sick.
Yep. Yep.
That reminds me of the HEX video that I made where I put the picture of Saturn that's given to us by NASA, and it has like Saturn's hexagon at the top. And I made a video kind of breaking down why that big wick happened on HEX. So if you guys are interested in my work and you haven't watched my videos, you can go to that video. It actually has a HEX logo in the thumbnail. So it'll be very, and I believe even like a picture of Richard Hart. So it'll be super easy for you guys to find it. But anyone who watches my work knows that I talk about the moon cycle a lot and how full moons are typically more like a bearish sentiment, and the new moon is more of a bullish sentiment. So it's great to see that logo, because you probably see the same thing happening in the HEX charts too, like these microcycle peaks happening on new moons.
Well, hold on. That just brings up another point. Let's go back to the old video that we did together.
I think I literally talked about that, how the all-time high of HEX happened like 3 days before a new moon.
Yeah, it happened on September 17th, 2021.
And then
and right on the screen, yeah, you could see these new moon cycles and full moon cycles, and you could see that there tends to be periods of increased volatility on moon dates, which I've always known because I read this study a long time ago that statistically kind of proved this, but it's fun to look at the actual pictures on the chart and say, wow, like there's something to this, I believe.
Yeah, I mean, it is what it is. Like, I know a lot of people, when they hear these things, they think it's like woo woo and they think it's all like crazy. But like, if you just study the way the world works, like most of your crime, most of your, murders, all of that, it's typically centered around a full moon. So the behavior of humanity is adjusting to these moon cycles. So what do you think a market is? A market is a very emotionally chaotic kind of, it's a zoo. And once you consider emotion as a huge part of the markets, then how could you not consider the fact that this lunar cycle could potentially be playing a role in how people feel on the day of those time frames?
Yeah, that's right. So that's pretty cool.
And that's basic astrology. If you start getting into like, actual the zodiac and start breaking it down by that's a whole other layer that you could get into. And there are some people that consider doing that. I don't get too deep into that because that's where it starts getting off the rails. There's sometimes where that kind of stuff is a little bit too much. But there is a fact that pretty much Sagittarius is a time frame where Bitcoin hits its all-time highs and its all-time lows.
Interesting. What's the deal with Saturn then?
Specifically with Saturn?
Well, I mean, other than the fact that it's got a hexagon-shaped storm on the polar cap.
Yeah. So, one thing to remember is that Saturnalia is actually a holiday that happens on the. It's a couple days. It's an old Roman festival. So, anyway, Saturnalia is happening in the time frame leading up into what we call Christmas, and in that time frame is when Bitcoin typically hits its all-time highs, like around that time frame. So, it's another piece of evidence behind a lot of the work that I've been sharing. But when you get into what Saturn is father time. In mythologies, he's father time, and this whole market works on an algorithm. It's all time released. Like Bitcoin has a certain amount of time between when it fulfills its block, right? This is all based on timing and algorithms. So the market was created to fulfill its big swings based on this algorithm, and that's why it's become a little bit more predictable than something like tech stocks.
Interesting. Yeah, I mean Saturn. And then the big planets out there, I mean, scientifically, they block a lot of asteroids from hitting the Earth, and they probably have some kind of effect on the gravitational pull in a way. I know the moon obviously clearly does with the tides and all that. So there's a lot that we don't know, and it is fascinating to just speculate on how that affects people's emotions and real world phenomenon.
Did you say somebody brought up a question? Oh, it was bringing up some sort of chart.
Yeah. I just wanted to see if this is actually any interesting to you. This is just on-chain data regarding, whoops, not this one. On-chain data regarding HEX. So basically we've got a community-made website called apphex.win. And you could see here, like basically the number of current stakers in PulseChain is steadily climbing basically every day throughout the bear market. And, it only really decreased on a couple of different days in November after big payday. And then essentially we're onboarding new stakers, which are the most important aspect of HEX. Like more important than a HEX holder is a HEX staker, because they're volunteering to keep the price up by delaying their gratification into the future. And we're nearing that 100,000 stakers mark, which is pretty cool to see. And at the same time, we could see, you know, the daily payout or the T-share rate is basically going up steadily every day, meaning it's getting less and less of a good deal to stake the longer you wait to make your stakes.
So Matt, is there any like predictive analysis that people have come to, like, that have shared regarding the increase in stakers and the price volatility? Because if we're seeing this move to the upside regarding staking, but we're seeing the HEX price lose 90 something percent of its value, does that mean that a majority of the HEX that's in existence is not being staked? It's just that there's more people deciding to stake a little bit of HEX. Like, where's the correlation, or how would this be helpful?
So this would be helpful in terms of basically divergence, right? So you can see on-chain metrics showing more adoption. You actually can see that of the liquid HEX that's non-origin address associated, other people have calculated this. I don't think it's visible on this particular website, but the statistics are going up for the amount of HEX that's liquid, although that only might be 5% of the total circulating supply of HEX being liquid on the market. Of that, approximately 75% of that is staked, meaning the other 25% is either, you know, liquid and dumpable or locked up in automated market makers or other centralized exchanges, right? So
Wow.
I think that's just very interesting because, and if you look at social metrics as well, there's about 100 or more HEX YouTubers that from every screenshot I see, you know, their metrics are way up, whereas a lot of other established YouTubers, social metrics are going down. So if you look at kind of the rumblings and the social aspect of everything and the on-chain data that's basically showing you that adoption is in full force.
It's because they have a relevant leader.
Yeah.
If they didn't have, I think Richard Hart is, and I've done my own research onto this, it's like he is the reason why out of all the communities right now regarding crypto, they're seeming to get a lot of attention. Like with Bitcoin, you don't have that because there is no leader. There's only the YouTubers that push out, you know, Bitcoin information. And Bitcoin doesn't really have any updates or anything sexy to talk about. So with a project like this, like with HEX, where it actually has some updates, it has people building off of it and doing exciting things, and then on top of that, you have a very controversial leader, which I find him hilarious. Like, I would love to interview to have a podcast with that guy because I think it'd be hilarious for me.
Yeah, we could see if we can make that happen, actually. But
yeah, I think that'd be great because he's super sophisticated and he's really, really smart. So you can tell, like, some people that he's had these interviews with, it's like they try to get to him with tough questions, but he just knows so much more about the technical side of things. And I like that. You know, it's kind of like, it reminds me of a Sam Harris or a Jordan Peterson kind of vibe, where it's like people try to debate him and it just doesn't work out in their favor.
Yeah. Yeah, basically. I mean, that is a lot of fun to watch. And there's no doubt that we wouldn't be where we were today without Richard. But it's also the strength of the narratives that he's putting out and the ability of other communicators to carry those narratives forward about the actual truth. I mean, he had a good quote, like, when you have the truth on your side, it's easy to win every single argument because
facts. That's facts.
Well, I mean,
so Matt, I have a question though that might be helpful for people, just because they're aware that I am quite ignorant of HEX and all the inner workings and the machinations of this project. But I would love to know, how has the HEX community and Richard Hart been responding to this big correction?
Well, essentially, you can do some quick math and figure out that, you know, a 90% dip from 1000x, you're still up 100x. A 90% dip from 100x, you're only up 10x. And a 90% dip from only a 10x, you're right back down to where you started in square one. So imagine if you had $10, if you had $1, it turned into $10, and then you lost 90%. Whereas if you had $1, you made it into $1,000, and that dropped 90%. You're still up massively compared to those other guys. So it's really about the amount of multiples on your investment. And it's almost like getting into a smaller room, or you can make an analogy of maybe like a chamber, or like, I don't want to say a chamber of gas, but I guess I will. A smaller box where the molecules have less room to move around, right? There's going to be more activity and more pumpability, for lack of a better word, in these things, because when you're yelling to like a smaller room, you have a lot of like new money hasn't flown in yet. The majority of the money in the world is outside of that room. And so when new people come into that tiny room, they really, really make it crowded. Whereas when the room becomes bigger, and I'm talking about liquidity, that's the metaphor. So like with things like Bitcoin, these are very heavy objects to move. these have giant rooms for people to fill up because they're already listed on every single exchange. They're already bought by billionaires of the world. They're already bought by the institutional powers that be. You want to get into these low.
It's like an oil tanker versus a tug, like a little, like, you know, rowboat.
Yeah.
A lot of altcoins are like rowboats.
Yep. And it matters about not how high they pump, but how high they pump and then dump and then keep going, which really depends on whether or not they have a community, a good founder, and product market fit. And all product market fit it's a narrative meme that survives the test of time. And if you look at what people are talking about in HEX, I mean, it's the world's first blockchain time deposit. It replaces a $7.2 trillion market, worth more than gold. Actually, the CD market is worth more than the gold market. When you look at all the things going on, there's a Netflix documentary coming out at the end of the year. PulseChain is going to be launching,
when's the date?
Will unlock. I think just end of year was the only date they gave. So I would assume December, or something like that.
That would be such good timing. Like, if I could talk with Richard, I would tell him, like, I don't know who's working on the contract with that, like, legally, but if they could get that release date sometime it's late December, that would be so fucking smart, because then they could bypass the big negative market. Like, the market's going to be at such a dramatic low by then to be a perfect launch. If it was to come out in like a month, there's still potential move to the downside. And that's where people start getting like anxious and aggravated, and the chat rooms become more dramatic.
Absolutely, man. And guess what? Like, they're in the final stages right now. They are literally in the sales stage. Like, so the documentary's been filmed. It's very high quality. These are guys that have won many, multiple awards for previous work that they've done. And right now it's just a matter of picking what platform it's going to go on. Is it going to be Hulu, Netflix, Amazon, whatever? And that's going to line up perfectly with a lot of things. Like, when PulseChain launches too, we unlock global mass adoption by making fees cheap and fast. Shout out to my buddy Chris Mayers in the chat. What's going on, man? Good. Thank you for watching. So it's going to be just a perfect kind of concrescence of all these different things. And we're going to have, instantaneous trading. PulseChain is going to be the gateway drug for people that claim that they hated HEX in the past. They're going to have a new method of onboarding themselves and maybe not having to admit that they were wrong, because nobody likes to do that.
Yeah.
So it's going to be just a perfect, narrative and perfect meme storm coming up.
Yeah, no, I mean, if they could get it out in December, I think that'd be ideal. People are more willing to spend money around that time. People probably left the market already for the most part. And Netflix would be big, because if you study comedians specifically, how much their careers have exploded just because of having these Netflix specials. And even like Chappelle, like, his career like became like completely in the shadows until he started coming out again and doing these Netflix specials, and now he's back on top again. So yeah, Netflix would be big. That would be,
and this is going to be probably the only crypto documentary that's not super cringe. You know what I mean? Like, from what I've seen, it's professional, and the team is so legit, and it's more so about a storyline. It's a narrative about Richard and the community and all the backlash that we've had to face and the uphill battle. It's an underdog story, and everybody likes that, right? It's not just, here's what Bitcoin is, here's how it solves the Byzantine general's problem. Like, nobody really gives a crap about that stuff, because it's just over people's head. You know what I mean?
Right.
Hold on a second. Tommy, thank you for the tip, brother. What's happening, boys? Bullish on Pulse and PulseX. Thoughts on staking ladders with the new chains? Are you going heavy? Of course. I'm going heavy with my staking ladder, especially on PulseChain, because I do think that the PHEX, the PulseChain version of HEX, I think will become the dominant player. It's not to say I'm just dumping all my EHEX, by the way. I'm actually going to be making liquidity plays and bridging it over. But to simply answer your question, of course, I'm going to be setting up staking ladders on the new chains. I'm already going to have my staking ladder on the new chain, but when I do future staking, I'm going to continue to add to that ladder when I restake my stakes, like I do most of the time. Coffee going to be a billionaire? Yeah, I hope so, bro. I hope so. You might not hear much from me anymore after that.
Man, 10 years, you might need to be a billionaire to buy fucking gasoline.
True.
And pay your bills.
True, man. I think they're just going to wirelessly transmit electricity through the ionosphere like Nikola Tesla. And I'm actually kind of serious about this. I invested into a company called Mad.Energy that is working on this technology right now. They're essentially finalizing Tesla's dream. And I think cars are going to just be wirelessly self-driving, self-charging. And we might live in a world one day where it's weird to own a car. You might go to a racetrack as a fun Sunday activity, right? Like, it might just be kind of like Like, oh, you drive like on the roads? Why would you do that? It's so dangerous. Like, you know what I mean? Anyway, that's just some futurism.
Well, I
Yes.
mean, yeah, that future stuff, like it comes at a cost. And like, I even heard the one interview that I fully watched that Richard Hart did. He actually spoke about it in the very early part of the interview. I think we might have talked about it in the last, or even on a private phone call, but he was talking with like two porn stars or some shit. And very early in the interview, he actually laid a huge truth bomb. And it was something that I actually said almost verbatim in an interview that I did the day before. So it was just crazy for me to hear another person who has such a much larger platform that I have, say something that I was sharing with people, which is essentially they're gonna move us into a type of world where it'll be like renting for everything. Like there'll be very little ownership, and this is going to be all on blockchain. And it's going to be really bad because the companies or the institutions or the government are going to be the ones who have say in what you're able to actually access. So people think this is weird or they think it's impossible, but I heard Richard Hart say it himself, and the way that he described it was very specific to the conversation. But one last thing I'll add is I believe it's Mercedes-Benz or what is it, BMW. They
They want you to pay for the heated seats or
whatever. Yeah. So I don't watch TV. I don't really use the internet too much. I am super busy and I only do my business. So everything that I'm learning about the world is typically from the people I connect with, right? And I connect with people who are very sharp. So I was hearing all these things come to, play, and someone brought that up to me, that heated seat thing. And they were like, my name is Waters Above, but they told me, they were like, hey man, I heard you literally say this on a podcast like a year ago. And can you believe that they're doing it? And I'm like, of course I can believe. Like I told you guys a year ago that they're going to start doing this shit, and people thought that I was like a tinfoil hat. Like when
and now the World Economic Forum is not even trying to hide it anymore. They're saying you'll own, they literally are saying you will own nothing and you'll be happy. And we're saying, no, we want a better way. I don't think ownership is inherently bad. I think digital ownership in the world of light rather than the world of atoms is actually a healthier form of ownership. And I think that's what blockchain unlocks for us. We have to secure our place in the digital ownership world now before the powers that be can get to that. Because if we can own some of these digital contracts, these NFT deeds or whatever exists on the blockchain in the future, we have access to that now. We have decentralized, we have the internet. And we're the generation that can understand this before, the old guys basically get their head around it, or they just die off. Maybe we just
and to build off of what Matt just said, like you do have access to it early, and the only way that the leadership of the world can, manipulate this is with price. So they're going to make you feel that you don't, like, this thing is going to be so low in value, it's going to lose so much of its value due to these price swings, that it's going to make people emotionally give up. But you're giving up on something that could be a freedom. So the thing that's really problematic is it's not necessarily the ownership. So I want people to like kind of take a moment to take in what I'm about to tell them. It's not really about the ownership that's the problem. It's about more and more privileges. So when they start to control privilege of every little tiny little thing that you do, that's when it becomes really problematic. That's slavery. So yes, there's going to be aspects of your reality that seem to be free will, where you could leave your house and you're walking in the world. But when they start utilizing like the Chinese social score system, where they start to give people specific privileges based on their social, media posts or whatever the fuck, like this is creating an environment where, we already need so much paperwork to just have certain privileges to be able to be a part of this society. Like if you wanted to get a car, you can't just get a car. You have to have a driver's license, and you have to have insurance, and you have to have, and to get that paperwork, you also need another thing. You need to have a birth certificate, or you need to have a passport, or you need to have another form of identity. And they're going to move into a type of world. I'm not trying to inject any fear into anyone. I'm just letting people know the truth, like I did a year ago. And I continue to do moving forward. This truth is we're possible to break free from it, from this upcoming like shitstorm, but it's gonna require people. It's gonna require teamwork from the people. So that's why, even though I'm not huge on individual communities centered around individual cryptocurrencies, I do honor and value and have gratitude for people who are in these communities if that is their vision. If their vision is to actually make a better world and sovereignty, then that is what I respect. But if it's a community that's based around a coin and all they care about is making money, then that's where I like kind of detract. And I say to myself, like, oh, these people don't know what they're in for. You know, the real future is about the sovereignty and gaining back your freedoms. It's not about money, because it doesn't matter how much fucking money you have. If
Right.
your car won't even work because you made a bad post on Instagram yesterday.
Look, the getting rich part is really just a flashy marketing headline with the underlying intention of financial freedom or freedom, time freedom, life freedom, whatever. You need to make money to free yourself from economic slavery. And so when we say we're all here to get rich, clearly we are, but we're also here to hold our own private keys, to take our power back, and to enjoy our life to the fullest potential, and to give that gift back to everybody and create this self-sustaining feedback loop to basically heal the whole entire world.
Yeah. Get rich off of what you provide to the world. Getting rich off of what someone else created, that's not true wealth. When you get rich off of something someone else built and someone else created, you'll become bored. And when you become bored, you lack stimulus. And when you lack stimulus, you don't have any outlet. But when you actually make something and bring something to this world that you designed, that you created, and then you're getting compensated for that, that's where you actually get fulfilled day to day with your life. You actually feel alive.
Well said. Cool, man. You want to end on that note? It's like a Joe Rogan mic drop moment right there. Let's
yeah, I mean, well, so first of all, I appreciate you and I appreciate your community. And I hope that Wyckoff lesson that I gave you guys was helpful and gave you a little bit more of a future outlook. And it was beautiful to see the play that we shared on the first podcast come to fruition with, HEX going to the downside. I have a conviction that it's not going to go much, much lower than where it is now. I think this market is in the process of what I call the bottom, which is about a 6-month time frame. It'll be volatile and jagged up and down for the most part, but this is the best time ever to be excited and aware of what's going on in the market. It is a very important time to pay attention. So I hope that's like encouraging, but also it is my truth. It's what I share over on my channel. And I'm very confident that leading into September, October, November, it's probably going to be a life-changing time in the financial sector. But when we have those changes, we also get clarity. And with that clarity, it helps us, the people that were aware before it happened. So yeah. And besides that, my channel's Waters Above Crypto.
Well said, man. If you guys are brand new to crypto, I've got a course at hexpassiveincome.com that'll teach you everything you need to know, save you thousands of dollars of money and mistakes that you would otherwise have made, and hours, maybe months of time. Far aliens, thank you for the tip, brother. If you're a more advanced and woke individual, you might want to check out Waters Above course and just his general services that he might or might not offer. So a little shill for you there. Smash the like, guys. Make sure you subscribe. Thanks again for coming by. I'll be coming out with some new content very soon, and I'll see you guys on the next video. Bye.